I'm doing great. How are
Hey
you, Kunal?
everybody, how y'all doing? What's going on, Evan? How you doing, brother? Joanne, how you doing? Linda, how you doing this morning? And Paul, you're up at now. This is 5:30 your time, so you are up.
5:30. Yeah, West Coast trading lifestyle. Get up, get up at 5:30.
I found that when I was on the West Coast, I was still going to bed like I would at 11 or 12. I mean, on the East Coast, I stay up much later, but I'd still stay up pretty late. So then it was very hard for me to adjust. But in theory, it sounds great because you get off at 1 p.m. and it's like, well, my idea is I'm going to go exercise and I'm going to do this and I'm in California. I'm going to go surfing. And then but you're so tired by 1 p.m. because
At
you
1
eat so
p.m., you're
early.
ready to just crash, basically. But it is nice that your day's over at 1. But you have to remember that you're up at 5:30 in the morning, getting ready for the market.
So for me, like usually like if I was at home or like at least back in the day when I first started trading live, I'd always have a couple beers at night, watching basketball. Like in the wintertime, like NBA
Oh,
League Pass is like that's like my
when that
thing. Like
happens, when
watching
that
West
happens,
Coast
it hurts.
basketball, having a couple beers, and you can't do that on the West Coast. It's like you stay up
No,
watching
you
basketball
still
all night.
do that, but you just pay for it. You pay for it Monday morning or Tuesday morning.
Oh boy. So, let's get started. So, guys, welcome. So, usually I do this with a Mary Beth, and we kind of go over, our game plans for the day in terms of how we're looking at our day trades and things like that. And well, it's earnings season, and so like my scanning is much easier this time of year than it would be if we were in a regular market. I had to have like a really extensive playlist and things like that. But Paul actually looks at the market in a similar manner. So one of the things that I do, like Paul, when I'm scanning for my stocks and stuff like that, even for the day trades, I still do the exact same stuff that you taught me. So I look at the indices. So I start judging, and I don't have to look at it and time it as well because, all I need to know is are we in a bounce zone or fade zone, and what are the probabilities of kind of what can happen. And so I analyze the S&P kind of how you taught me, and then I start determining probabilities and risk of like, all right, well, the S&P could start bouncing if we pull back another 2 points. And so till then, we're kind of in a spot where, selling is going to come in. And so, I'll need my long list ready just in case. But I know that I still have more to come back in the S&P before we really get that sharp, easy-go-lucky bounce. I still need shorts for day trade side.
Yeah, it sounds like even though you're day trading, we're looking at the same thing. What I've been talking about is right now the key levels for us is SPY 190 and 195. So, and it's not, you talked about, 2 points away, and we're about 1.5 points away, I think, from 190, and that's where I'm looking to really get aggressive and enter some of the bounce plays a little long. So yeah, we're basically looking at the same thing, even though you're day trading and I'm swing trading overall. And
Well, yeah, you
in
got to
this
look
type of
at
market
your
where
time.
we're in kind of this corrective phase, um, what I'm scanning for is a lot different. You talked about earnings since it's earnings seasons. Basically, the only stocks I've been trading right now is stocks that have had good earnings because that gives you the catalyst where even in this market where you don't really know what the market itself is doing, at least these specific stocks have catalysts that can allow them to move against the market if the market goes against them.
True. So stocks in play, guys, always have an order flow that is typically independent of the market, especially the day they come out and then the subsequent days. They will act in their own manner. But if you do get that stock in play and you had that really nice, heavy volume spike that first day, after that first day, you typically will come and see some type of retracement, and that's when the second leg will come up. And if those if that bottom is made, you'll typically see the second leg even higher than what happened in that first day. And so it's really important to keep a list of exactly what stocks are having good earnings and earnings beats and things of that nature. So do you have any in favorite that you're looking at? I got a couple that I was going to run by. I've been stalking this Baidu.
Yeah, actually, I almost entered that yesterday. It'd be interesting to see how you're going to trade. You're looking at it as a day trade, right? Or are you talking about as a swing trade?
Well, yeah, I would turn it into a day trade. Then I would, if I had like say 500 shares, then I would keep like 100 for a swing.
Okay. Yeah, let me pull that up and all right, you can see my screen here.
Yep.
Okay. So, well, this is my focus list here of stocks that I'm watching right now, and Baidu should be on it here. Let's put it in. But yeah, this was, I believe this was an earnings breakout here, but a
Yeah.
really strong breakout on high volume. There's this big gap here. The stock has pulled up and pulled back now, and it looks like it's kind of pulling back to this 210 range, and you've got the 20-day moving average moving up close to 210. So this is kind of where I'm looking to enter here. It's pretty basic. You just, as it drops down to 210, I'll look to enter, put a stop under the 20-day moving average. My first target here would be right around 230, where the high of the breakout was. And from there, depending on how the market is, how the stock is doing, I'll reassess whether I want to take partial profits and see if it can go higher or just take a full profit. But yeah, as a swing, that's how I would look at it. What are you, as a day trade, what are you looking at?
So for me, like how I would start lining it up would essentially, I'd be looking at like a 30-minute chart. Once I got an idea now that the day trade will work because the volume was light on the pullback.
Yeah.
You worked off the stochastics. You had a good fill of that gap, and then you also have a potential kind of a bottom being put in. Where you've got kind of an area that it seems to be holding. So I'll start monitoring that 30-minute chart to really just start kind of nailing down a proper pattern. And so from there, I'd be able to draw kind of a bottom and almost a makeshift, trend line from top to wherever we are. And so that's kind of the area that I'd be looking in. And then there's just two things I do. So I'd be drawing the line from like say 230 down to it connects at 220 down to 216. So I'd have a trend line, and I'd make two assumptions essentially. One is if the market does start bouncing, then I would just take an anticipatory trade, and I'd use that 30-minute chart to essentially put my stop loss, and then I would just let this thing rip. And so then once I'm in, I'll use a smaller chart to nip and tuck around my day trade, and I'd probably keep a few core shares.
So I've got the 30-minute chart up here. So you're looking at this bottom here at 210, right?
Yeah.
And then the top at 230. So we're basically it's amazing that we're looking, even though they're two totally different trades, we're looking at the exact same thing. So, but you don't necessarily need to enter around 210. You're looking at how the price is moving within this 210, 230 range.
Yeah, and so I'll wait for typically just a little confirmation with the poke out of its trend line or something like that, just to get an idea that it's moving, so that I'm not sitting on dead money. Because in day trading, like if I made a 10% gain on this in a swing trade, that would be a good trade. But if it took me a week, it would actually be on a relative basis probably a loss if I'm trading hot, because I'd have a $200 stock that I have 300, 400 shares of. I mean, it's going to tie a good chunk of capital. And so I really want to make sure that I've got it timed just correctly.
So what would you be looking at here? I would imagine you've got this trend line going from 230, and there's this pivot here around 220. It's coming down. So you're like where these moving averages are, you'd be looking for a break of that area?
Yeah, and when I'm trying to, so I would initially take like a core, and so if I just see a little bit of an inkling that, this thing is moving, so maybe it gets to 214, 215, I'd start loading in on a 5-minute chart to nail down like my exact entry.
Okay, so you're going to go from the 30-minute then down to the 5-minute.
So I'll use my 30-minute to really manage my risk and make sure that like my levels and everything, I'm looking at it properly. And then the 5-minute, I would be using any one of the patterns, just like we trade, flag or an opening range type of play. And that'll kind of get me in the play when it starts moving.
For my swing trades, I basically, the night before, I've got this list, say I've got 10 stocks I'm really keying in on for the next day. I've got my entry written down, I've got my stop, I've got my target, the risk all calculated. So when the trade comes up, there's really not a lot of thinking to do aside from looking at the price action, just making sure if I'm doing a pullback, the volume's not too strong, and some other little things that I'm looking at. But, the day trades that I've taken, the issue that I have is it's moving so fast, and unlike the swing trade where I have everything already calculated, you've got to right away calculate your risk, your stop, your target, basically within, a minute, maybe even less than that.
Less than that, yeah.
Is there some kind of tool you're using, or are you just staring at it right away, just doing calculations?
In day trading, essentially, everything you do, you got to essentially, you're playing, you're playing consolidations or, some type of flag or, pullbacks or, anything along that end. And once your risk is managed and you know that you're in the right stock, the whole part of day trades, you got to be in the right stocks that give you range, that can give you the ability to play, a couple dollars at least. So once your risk is managed and you have your 20, 30 cent stop loss, and you have an idea that this stock could potentially move a couple dollars because that's the range of the stock, and that's where the potential move could go. But you don't really know. You can't pick targets necessarily in day trade. So what I have is essentially like a reasons to sell list. So I have reasons that I would sell a stock once I'm in it. One of them could be that it's just getting too extended, and so I scale out a third of a position. One of it could be that the series of higher highs and higher lows has been negated. And so I'll have a variable list, and so you have to think of it on the fly. And that's why it took me so long to figure out day trading versus swing trading, where you can be really, if you're a really disciplined person, I think you can be really good. I think if you're disciplined you can be really good as a swing trader because you're managing your reward to risk levels more than anything, and probability is not as important. You can have 50-50 probability. Where in day trading, I find like you have to have a little bit better probability on your trades, so your setups have to be really good.
So you're focused more on the probability than the risk, because with swing trades, it's more. You can have a 40% win rate and do really well if you're managing risk right.
And with the day trading, I just need to know that the risk is small. And so, like, you still are just like your swing trades would have, like, I have a max $400 risk on this type of setup, or $1,000 risk on this type of setup, or some setups I have $200 risk because I'm not that good at them, and so on and so forth. And so then I have to size my position accordingly to whatever my max risk would be on that trade, whether it's 0.5% of portfolio, 1% of portfolio. And then, but you can't really pick a target. You've got to go with the flow and manage the trade. And then a few times a week, just like you would in swing trading, which would be maybe a few times a month, a few times a week you're going to have the opportunity for that home run trade that's going to go, you're in the right stock, it's moving, and you're going to have the opportunity for that 10, 15, 20% gain. And then it's just about identifying that you have it and making sure you can stay in it and riding that sucker.
Yeah. So I'm staring at Baidu now, and this is an issue I have sometime with day trading, where when I look at it as a swing, if we pull back out here to the daily, it's a great breakout pullback setup. Gap is filling. 20-day moving average is coming up. Looks like it's ready to move now. Make a move up, at least back to where the breakout high was. And now, so as a day trade, then you'd look at that and you say, okay, that's going to be a long trade, right, for a day trade.
Yeah, yeah, idea
But now,
generation.
but now I go to the 5 minute chart we were just looking at, and
There
this
is a
chart,
pattern.
if I didn't know it was a 5 minute chart and I was looking at it as a daily, it looks like a stock that's in a downtrend, and I'm gonna short when it comes up to these moving averages.
Yeah, so when you're in day trading, so I wouldn't be necessarily looking at any of this because I've looked at the 30-minute chart. I know exactly where the trend lines are, and I know exactly kind of where the range is. So I know that what I'm looking at is just a zoomed up jumble because
Uh,
stocks on the days that they're going up, right, and when they're hot, obviously the charts will look very, very clean. But pullbacks in general always look messy. All pullbacks look, kind of messy when
okay,
you zoom in.
so a pullback when you zoom in, then it looks totally different.
Yeah, pullbacks look messy on these type of plays when they're pulling back. So none of this would matter. I know that it's in the zone to start bouncing, and so today, if I saw something appear, so if I saw like say an opening rush, like an opening spike of $2-3, well, I have a potential flagpole there, and now I have an assortment of things I can do. I have a pullback or a flag or a consolidation that can take place, and then I'll start watching to see if a trend starts to emerge on a smaller time frame.
Okay.
I'll
So
record my screen when I do a couple of them so you can see them.
yeah, yeah. So I guess you're not playing a lot. You're not playing as much the pullback as like a catalyst or something that's moving the stock.
No, no. All I need is the overall look on the daily, and
Okay.
then I need to make sure that it's not going to pull back too much farther. And then I'm looking at that smaller term time frame for an assortment of kind of momentum setups on that particular day to tell me, okay, the bottom is in.
Got it.
So what else are you looking for? So I had a couple stocks that I was looking at, but you know what I noticed, and I don't know if you've ever noticed this. Like, I was eyeballing like this, like potentially a Twitter for a swing trade. But I wonder if this is one of those things that's just so well watched, and this stock, due to its big float, like that and Facebook tend to always trade a little bit weird for me on the day trade side.
You know, I
Now,
am in Twitter right now. I entered a few days ago on this pullback here, and
mhm.
I usually, even though I usually stay away when there's this huge gap because you never know if the gap's going to fill or not. But I like these kind of rounded pullbacks, and it looked like I entered on this day that's green here, so 3 days ago, and I usually don't actually enter a stock with this big a float. The float is almost 400 here, and I try to stay under 100 because it just takes so much volume to move these types of stocks.
It really
But
does. I think their float is actually now, after everything is all said and done, after they've had their lockup expirations, it's close to 1 billion.
oh, is it? Wow. So telechart's wrong then. But even 400 is a lot. I stay under 100, and even that, I'm usually trying to stay under 50. But with Twitter, I just thought it had that catalyst with earnings that it's ready to move up. And then when I pull out the chart, there's this big downtrend here, so there's a lot of room to move now. I mean, it could go up to 60, 55, 60, and we're at 43 right now. And with
Yeah,
that
and
big
even I guess even the high of its, earnings days is almost near 49. So it's a
yeah, yeah. So basically, Twitter is not something that would even make my watch list, except for the fact that it was an earnings catalyst. When I've got an earnings catalyst and it's a volatile stock, a stock that has shown in the past that even though it's a big stock, it can move quite a bit, then I'll consider it.
and I mean, that's the problem I have, with Facebook. I can almost never trade it because the float is just, I mean, the thing is a monster.
Yeah, and Facebook.
Because I want to trade Facebook. Who wouldn't want to trade
Yeah,
Facebook?
and
It's
the
something we all
patterns. I
use.
mean, it actually had a better setup. Just because if you look at Twitter here, there's this huge gap, and I'm always worried when I enter before the gap fills that the gap could fill when I enter. But when you look at Facebook, it had that same almost the same setup as Twitter here with that rounded kind of pullback, but it has pretty much filled the gap. So it's really a better entry than Twitter was. But yeah, that's it. I looked at the float. It's 2 billion. Even you look at here, it's moved from in months. It's moved from about 60 to 70. So you're not going to get um, quite as big of a move. Where here, with Twitter, I was looking at possibly from 40 going to 60. With Facebook, I'm looking at going from 72 to 76.
Yeah.
So even though technically the setup is better in terms of making money, I think Twitter's the better way to go. Just because it's got the lighter float than Facebook and can move a little more, even though it's a heavy stock too.
The one I did like that seems like it would probably move a little bit quicker was this that I've been watching is this UA. That seems to be holding up much
that's
better.
one of the earnings breakouts. I've got a list of about 15 earnings breakouts. CMG is one, and this one's like the float is 26 million. So when you've got a catalyst, it really has a chance to move. UA was another earnings breakout play, and here with UA, I'm just waiting for a pullback to this bottom of this bar. This is another one where there is a concern about the gap fill here, so what I'll do is I'll enter as close to 65 as I can. Maybe if it gets down to 66. I'll have my stop probably around 64. If I get stopped out, I'll consider re-entering around 60, which would be a really strong area, because we've got this support going back to March, and a kind of a cup and handle play here. So I think it could really bounce if it somehow pulled back to 60. Whether that happens or not, I don't know. So I'll try an early entry at the bottom of the breakout bar here. But so far it hasn't. It looked like it was going to pull back far enough, but it hasn't so far.
Well, this stock, because you got the 20-day moving average kind of lining up under it too, does that kind of help the setup?
Yeah, that's like a converging support area, so that does help the setup. Usually, the 50 and 200 are a lot stronger for swing trades, but in something like this, the 20-day can also help as support also.
Sweet. What else you got that you like?
Let's see here. Well, I saw that you guys had Z as a watch list stock, and I just entered that yesterday. So we can take.
My one worry with this, and I don't know how to handle these. I'm just not. I guess I'm not that well learned on fundamentals and stuff, because this has a buyout on it. With the TRLA.
Yeah, that's what moved it right here. I had been watching it on this uptrend, looking for a good entry. Thought about entering on this pullback here to the 50-day moving average. For some reason I didn't. Maybe there were some other stocks I liked better. Then there was that buyout with TRLA, and the stock moved up here. And that did make me a little nervous because in terms of breakouts, I like something that's real, like earnings. Those are the strongest breakouts. So a rumor-based breakout, like a buyout or something like that, makes me a little cautious. But the setup is so nice that and usually if this was an earnings breakout, I would have entered. You see where this old high was? At the end of June, around I think it was 145, somewhere in there. If it was an earnings breakout, I would have used that as support and got in around 145. But I was more cautious with it because it was a breakout based on those rumors. And I think we had earnings. I was really watching closely. I think 3 or 4 days ago there was.
It did have earnings.
It did have earnings, and it didn't react badly to the earnings. It started to fall, came back up, and since we've got earnings out of the way now, and it handled it pretty well. I think if it was gonna drop, it would have dropped on those earnings, and it didn't. So I took the entry here around the 20-day moving average. I saw it breaking down below the 20-day moving average, and yesterday when it remounted it, I used that as my entry. I'm using a tighter stop just because of it's not an earnings breakout and the market's bad. So again, normally what I would do is I would make my target up here around 160. And because I had a bigger target, I could put my stop down below the 50-day.
Yep.
So I would probably put my stop around 130 and still get a good risk reward. But because of the iffy nature of what's going on with the stock, I'm using a tighter stop around 136 and a tighter target. So I'm still getting the same risk reward to risk, but keeping my losses, the potential loss, smaller.
Cool. So, Paul, can you go over kind of what you're seeing on the indices so kind of people can get an idea of what's going on with your daily trade reports that you send? Because your focus report has the market analysis and then, your positions, your focus list, the different things that you're seeing in terms of your trade report for the part-time traders.
Yeah, the first thing I do, even if I'm not trading the index, the first thing I do is analyze it to see, what I'm going to do with my overall strategy with the individual stocks. And what I'm looking at right now is basically 195 and 190 here. And we've got this pullback now that has almost hit 190. We're at 191. Stochastics are at almost 15, which is oversold, but I really would love to see it under 10, maybe 5 for the bounce entry. So 190 is basically a long setup. 195 is a short. So if we started to bounce on low volume up to 195, and you've got these converging moving averages, the 20 days starting to slope down now, the 50 days kind of leveling out. So if it bounced on low volume there, it'd be a nice short setup right around 195. If it bounced on strong volume, we'd have to reassess and wonder if it's going to remount these moving averages and continue the uptrend. But so far, it's given the indications that it's in a downtrend, and it might continue the downtrend down to the 50-day just because the volume has been so strong on this pullback. What I would have liked is a really hard move down to 190. Instead, it's kind of gone down, come back up, come down, come back up. So that makes 190 a little. The probability is probably a little lower on that trade, but there's so much support in here where this trading range was that I think there'll be some buyers that come in right around 190. So that's what I'm looking at right now, about 189.50, 190 entering long there. And I'll use the leveraged, because 190, you're looking at a 4 or 5 point gain on a stock you're going to have to invest a lot of money in because it's at 190. So what I'll use is the 3 times leveraged ETF. I think it's UPRO, and so if the stock ends up moving up 3%, you're going to get a 9% move in UPRO. So that helps with the volatility.
Nice. And so then you will also time a lot of your holdings also in this manner, if markets in bounce or fade zone or things of that
so
nature.
I'll also be looking at some stocks to enter also. So I'll probably use UPRO for the index entry, and I'll also be watching stocks that are on my focus list that have been beaten down and look to enter those long also. And it should help. Like Z, I might not have taken Z here if SPY wasn't nearing that 190 level, but I'm thinking, if SPY goes to 190 and bounces, that's going to help this setup too.
Did you get my email on? I took a stab at this damn Chinese ETF in my swing account.
FXI?
Yeah.
Yeah. I actually made a list here of the stocks you're watching, and these are for day trades, right?
No, I took the FXI in my IRA.
Oh, okay.
So what I was sending you is originally I had, if you go to the weekly chart, you have like a huge multi-year breakout. And then I used this 20-day moving average. So just like how I would in a day trade. So then I used the 20-day moving average.
You look at monthlies for the. I usually don't look down that low.
Yeah, I was just looking at the weekly, because I've been just watching. The Chinese sector has only been, it's really been the only hot sector of recent. So it just keeps showing up on my scans, and so I just wanted to see what was going on with the Chinese market in general. And I just saw, like such a big breakout, essentially coming out of, I don't know what those are called, wedge triangles, something along that end. And so I've been just stalking it for a while, and so now that we got kind of right down to that 20-day moving average, I took a stab at it. I actually used the ETF YIN, YNN, which is I guess the 3x leverage. I'm a sucker for leverage.
And when you use leverage, what I do is I get a lot of questions about this when I'm using a leveraged ETF. I don't trade off the leverage ETF. I'm still looking at the main ETF that it's with. So if I was trading FXI, but I was going to use something for volatility, I would still base everything off FXI, even though I'm trading that leverage stock. Is that how you're looking at it too?
Yeah, same thing with me. So I'm trading YNN, but I'll use this FXI as like my guide.
Okay. So yeah, it looks like a really good setup. You've got the pullbacks. I mean, there've been some small gap downs, so that's not a huge concern. They weren't too big. Even with me, the trouble I have with these sometimes is
they're always going to be gappy, because that's why I emailed it to you, because since it's overseas, no matter what, I'm going to get gaps.
Yeah, this type of setup, you've got the 20-day that's giving you some support here, and usually the 20-day is not quite as strong as the 50-day. But you've got the 20-day there, and people might be looking that we might get a bounce. The trade I would love is if it pulled back down, towards the 50-day, and you've got this really strong level of support here between 38.
Yeah, that was, that's my second mark. So one of the things, just like you do, is I'll take a stab, and so if I lose the 50 cents, then I lose the 50 cents. And so I'm in like a half position, because I know that the 20-day for swings is not necessarily the super support, but I have a breakout pullback support at the 38, 50, 39, breakout pullback support, at that flat top that you're looking at, along with the 50-day moving average. So at that level, I would go in with a bigger position, because my risk is going to be a lot more managed.
And that's the kind of analysis you have to do, and you have to really focus on trade management and just kind of understanding the setup and not worrying about taking a small loss. Take a stab here. If it works, great. If it doesn't, you're only going to allow yourself a small loss, and then you can re-enter here around 38.50. A lot of people, they take this trade here and they'll make it a big position, and if it drops down, they have issues with their stop. They might let their stop get longer because they're looking now, oh, well, maybe it'll bounce at 38, and then they just get this bigger loss. So you really have to understand how to manage these positions, how to have a strategy going into the trade.
So, and this with the leveraged ETF, which I use the YNN, the old high was $37, and I got like 30 to 40 kind of zone. So even with 100 shares, I have a potential $500 gain for essentially $100 loss if I get stopped out. So no matter what, even if the probability is a little bit less, if you can have a potential 4 to 1, 5 to 1, you got to take a stab at it.
What was that leverage ETF?
A YNN.
YNN?
Yep.
Okay, it's not coming up for me.
Oh yeah, YINN. Sorry.
Okay. YINN. Oh yeah, you have a lot of room here, and there's a little more volatility here. Yeah, that's a good. Maybe I'll take that trade. It's a pretty good setup. Although there is that concern here about pulling back.
Yeah, and that was my thing. Is I'm going to risk basically $1. Maybe even, you could even make it 75 cents. But I put $1 for just round number.
The question I get a lot is, how do you know if it's going to or not? And really, you don't know.
You don't. You take
There's
a guess.
not much that really tells you. You basically just have to manage the trade, risk rewards, and just take shots. And the ones that pay off are going to pay off big.
Yeah, and because it's just such a big breakout, in all time frames in the China markets, there's a shot if it does hold and it starts moving up, it's going to take out the 36, and you're talking about a major breakout in these indices. And I mean, it's in a strong trend.
And there's some individual stocks that are pretty good too. Might even be better than.
Yeah, we've been day trading this bad boy quite often.
Have you? Okay. Yeah, this has been on my watch list. And actually one of our trade report members love this stock, and I don't know if he took the trade or not, but yeah, there's a bunch of these China stocks that have been moving and actually look better than the FXI does even. But I guess
Yeah, they move.
for your you said it's in your 401k
Yeah, well, in my IRAs,
or in your IRA.
well, we day trade this CMCM. It's one of those stocks when they go, they have so much range. When you have $3-4 range, that's really all you need.
Yeah. So so it's basically now it's broken out. It's moved right up to this kind of resistance level here, and I've been noticing. I dabble a little in day trading. Not, I don't have all the
So
setup.
I'll show you kind of how the patterns work. So once this thing started breaking above 20, where it held these moving averages and started to make its move, so 2 days ago essentially. So if you look at the 5-minute charts on this, you'll see a whole assortment. Once the stock gets the volume and trend and all that, you'll see a whole assortment of setups. Like yesterday, right at 30 at 1 p.m., you got this like flat top type of breakout.
Okay. So when you see this developing here, are you playing the pullback or are you waiting for this breakout to happen?
I'll take the breakout. So I use a 9 EMA on my 5-minute charts. So that'll give me that I find is really well for day trade. So you'll get like a much closer kind of idea of where something's holding. So you can play the breakout. If you miss it, this first kind of 3-candle pullback, that's an easy-go-lucky spot also. And then, you're essentially just taking these type of rips.
What if it moved back to do you pay attention, is 20-day, so you're looking at different moving averages on a day trading?
Yeah, so I'm looking at the 9 and 20. I use EMAs for day trading.
Okay, so 20, so if it pulled back to the 20-day, are you entering or are you still waiting for a breakout?
Yeah, I would take an assumption trade on that because you have the all that support at 2350 because it consolidated there all day.
Okay. One thing I've noticed on day trades, and this seems to be a really high probability setup, is when you get these breakouts that are going right into a resistance level, like here, it's close to maybe 25, 26. You get a breakout that goes into that resistance level, and it's not showing it as much here, but then once it gets that resistance level, right away you get a hard pullback.
Yeah, you will.
Or if you can counter trend, and it's kind of scary to do because the stock is moving so fast up, but if you short right at that resistance level, it seems almost 70-80% of the time you're going to get that pullback.
They will, and what you'll find in day trades too, if you're just looking for that quick pull, like the 50-cent, 60-cent pull, you're not really going for the home run. You'll find that if it stalls around a round number, you'll have an easy way to manage your risks. It seems like those round numbers tend to be in day trading really huge spots where things fade, or they might act as support.
Yeah, and it seems like you almost don't even need to look at the intraday. I mean, you just look at that daily, and you've got that resistance level there, and it's going to pull back.
Yeah, it's a lot of things in even day trading. You're making assumptions. As long as you manage your risk and you have an overall theme of, hey, this stock is extended, or this stock is doing this, then you can take an assumption and just manage your risk.
Okay. Okay.
So let's answer a couple questions from some of these folks.
Sure.
So a couple of people asked, so how much time a day do you need for your service?
For my service, basically, I've done the research. So you get the market analysis. You've got a focus list of stocks, and you can read that in 10 or 15 minutes. Write down the list of stocks you're watching, and you're done. So really, 15 minutes is all it takes. 10 or 15 minutes. There's also usually, we've added videos in there, and the videos are usually 5 to 10 minutes. I can actually pull up the last report here. Yeah, here's last night's report. So what I do is first I have a quick summary here of what I've written in there. So if you didn't even want to read it, you've kind of got an idea right here where we're looking at for SPY, talking about what's going to be in the video. The new additions to the focus list, which are FSLR, PNRA, and ZU. Actually, PNRA and ZU were removed from it. the breakout pullbacks we're watching, the market leaders we're watching. There's a video right at the top here. If you don't want to read, you can just listen to the video. This one was 8 minutes long. First things first, we'll have the market analysis. So right here, I've got that 190 level we're talking about, and also the short setup here at 195. We go over the game plan for the day, current trades I made during that day, the trade journal results. There's a spreadsheet here of all the trades that I've taken, and alerts are sent out for all of these trades. Right now we're up, since May 13th, we're up 18%. And going back here, then we've got the focus list here, and usually on Monday it's broken down more with entries, annotated charts, but since we've already got that, I don't need to keep posting that every day. So I've got the list of, these are basically all earnings breakouts that we're watching. Some of them we've already entered. Deck here we had entered and already exited and got a nice profit on that one. Then if there's any new additions, we've got the annotated chart like we would on a Monday. So FSLR is the new setup here. It had broken down. Now it remounted that 50-day moving average, and we're looking for a pullback to 66. So that's the new setup we're looking at. Then every day I've got this list of market leaders, and they're not necessarily the leaders that everyone else might think are leaders, but it's just the stuff that I watch every day, and we kind of go over them. We've got a really good feel for these stocks, so these stocks get traded quite a bit. And yeah, you can go through this in about 10 or 15 minutes, and you're ready for the next day.
A few people asked, Paul, so, you know, how many positions do you usually hold? How many positions do you personally hold? Because it's not like you're a portfolio manager. You're going to have like 18 positions, you know.
No. So
more concentrated.
For the trade report, I'm trading a $100,000 account. Right now it's around 118,000, and I'm trading it on margin. Generally, I have anywhere between 2 and 4 positions. Right now, we had 3 or 4. I exited deck and win. So right now I'm in Z and Twitter, so I've got 2 positions. And it really depends on the market. If it's a really strong market, I might have some more. I tend to go for quality instead of quantity. So my positions, you know, on that 100,000, 118,000 account are generally between 20 and 30,000. So that gives me the ability to go up to maybe 7 or 8 positions, but I'm usually between 3 and 5, somewhere in there. And you know, if the market's
how would somebody manage this? Say you got, I had a couple of people say, hey, I got 25,000 bucks. So what's the best way to use your focus list? To actually split it up, or to?
I'd say if you're at 25,000, I would only take 2 positions. Just go for the best positions. You know, go for the quality rather than the quantity. And yeah, don't break it. You know, I've had some people who like to break it down to maybe 5 or 6 really small positions, and you're really in quicksand then in terms of making these really small gains. So I would go for 1 or 2 really strong positions.
Yeah, I mean, I tell my guys with the smaller accounts the same thing. I tell them it's I mean, find out what trades make you comfortable, like that you kind of understand. You know, there's certain setups that people just don't understand. Like I know people have trouble with bottoming patterns, but like maybe you understand and you feel comfortable with the risk and how it moves, like on a breakout pullback. That's kind of something you get, because you got to understand what you're getting into. You can't just always blindly look at stuff. You know, so when you have an understanding, then you feel better about the risk. And so you stick to the stuff that you know, that you like. That way, when it's a loss or something like that, you understood exactly what happened, you know, where rather than freaking out. Because if you take the setups that you don't know yet, all that happens is those frantic emails of like, oh my God, are we going to get out of the stock? And it's like, whoa, it only went down 10 cents. Like, relax.
Yeah, and you know, you've got to manage your risk. If you've got a $25,000 account, your stop should be set at a place where the loss doesn't bother you. You know, if you've got a $25,000 account and you're taking a loss that's going to be $200, that should be no big deal to you. $200 does not really affect your $25,000 account. So you never should take a trade where you're feeling anxiety over it.
So a couple of people ask, just for if you're a new guy, how much capital to start if I'm interested in swing trading? So I would always say the more the merrier, but
Yeah, obviously the more the better. But I started with $5,000 and I've never put a cent into it. So you can start anywhere. You just have to be patient, work at it. Don't, especially if you have the small account, do not overtrade. And there's a tendency to want to do that. You see, especially if you only have one or two positions, and your positions aren't moving, and you're always going to see other stocks that are flying.
the
But
jumping bean.
yeah, you can't do that because inevitably you move out of that position, you move to the next one that's already flown, and now that's going to sit dead, and you just get in that cycle, and you're paying all these commissions on the small account. So you've really got to be patient, take good setups, wait for your stops and targets to get hit, and yeah, just be patient, be willing to let it take some time.
That's always going to be the hardest thing for everybody.
Yeah, yeah.
So a couple people ask, and I know the answer to this one, but do you consider weekly OPEX or pinning for trades on Friday? I don't even really know what that means. He's one of my students.
I don't. That's a strategy that I don't use. There's so many ways to make money, and you're not
hundreds.
Yeah, and you should have a basket of a limited. People have this tendency, they hear this trader does this trader does that. You really have to find what works for you, what fits you, and do those trades over and over again.
It is guru to guru. I see. Now after 6 years, it's like, oh, let me try this guy. Let me try this guy. Let me try Dan Zanger. Let me try Paul Singh. And it's like, I mean, it's all the same stuff in essence, But if you don't stick with one thing, you're never going to get good at it. So you'll never know if any of them are good. Because
exactly. Just have a basket of maybe 5 or 6 things you do, and things that you can adjust to different markets. But have these kind of bread and butter things you do in different markets at different times, and just stick with that. Yeah, you can't learn 100 different setups and be good at it.
There's no holy grail indicator out there. I've looked.
We all have.
That's it. I get it every week. I had one student just be like, "Hey, I'm thinking about using these Fibonacci's. I heard this guy using." So
yeah,
I'm like looking at his simulator trades, and I'm like, "So let me get this straight, because you can't figure out how to trade a flag pattern." He kept screwing up like a very simple pattern. So because you're having trouble even with the most simple of patterns, now you're going to add these imaginary lines that nobody really knows how they're computed or come from.
Yeah,
and that's going to save you. I don't know how that has anything to do with the fact you're not putting your stop losses in the right spot right now.
We've all been there, and early on I used to use every indicator under the sun, and you should have seen my charts. They were like a complete mess, and over the years you figure it out. Simple is better. The indicators are only based off price and volume, the stuff you're already looking at with your eyes. So keep it simple. Yeah, there is no holy grail. Manage risk.
Dun, 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 dun. Let me see. We got a couple other ones here. Dun, 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 dun. Richard, do we access the swing trade reports through the bull site, or does Paul send us email with links to access? Richard, the swing trades, you sign up for it on the bull site. They will be on the Bulls on Wall Street blog, and there's a swing trading page on the blog. And when Paul does make a swing trade post, Paul does offer, when Paul makes a post, it will get emailed to you. Carlos, do you guys offer a yearly discounted rate? I believe I do. Paul, what's the yearly rate?
I think the regular. So if you paid monthly, it would be $1,200 a year. The yearly is $999.
Okay. So if anybody wants, just email us, and we'll set that up. So if anybody is interested in a yearly, it's $999. So it's 30% off, and we'll get that set up for you today. Just I put my email in the box. So I think that's it. I'm going to let you get to work, Paul. We got 7 minutes till game time. Well, I guess your opening is probably a lot less stressful than mine.
It is. I'm still watching. I'm a little nervous about Z. We'll see how that does. But yeah, this was great. Let's do it again.
The open is where I make 80% of my money now.
Oh, really?
I don't know why. I think, you know what, it's just, I think I'm so fresh at the open. By the time 1 o'clock hits, two
Uh-huh.
o'clock in the afternoon hits, I'm like dead tired. I've been
Oh
awake
yeah.
2 hours.
For a swing trader, sometimes you watch that open and it gets so exciting, but you end up not doing anything for that half hour. So like, it.
Yeah.
All right, so yeah, I'm gonna get to work. This was great. Let's do it again.
All right, thanks, Paul. We'll do this again soon. Hey,
All
guys,
right.
we'll see you later.
Bye, Kunal. Bye, everybody.
Peace.